Greg Andrick here with another Business Freedom Conversation post. So this one is really interesting. Is a wealth tax constitutional? So there's a lot of foot going on, some really major stuff going on, and we're all being distracted by other issues, but some really critical major items are going on. So the 16th Amendment revised the Constitution to allow taxes on incomes from whatever source derived. The Supreme Court has long held that income tax can only be for, say, wages or the sale of a property or a financial asset. It has never been defined as unrealized income, such as from an increase in the value of an asset or on paper that hasn't been paid out yet. 2017's mandatory reparation tax. This is a tax on foreign-owned businesses by U.S. citizens, which tax shareholders of some foreign corporations on their retained earnings. So a couple in Oregon invested in a company in India. It made money. They never received a distribution, and the IRS assessed them with a tax, which they went to tax court and then wound up popping out from there and going into the regular court system. And they lost in federal district court. And a panel of the Ninth Circuit Court of Appeals upheld the tax, that a realization of income is not a constitutional requirement. In Eisner versus Macomber in 1920, the Supreme Court held that a gain in an asset's value qualifies as income only if it is received or drawn by the recipient, or basically the taxpayer, for the separate use, benefit, and disposal. Now, the Ninth Circuit Court is the first court in the U.S. to depart from this Supreme Court definition of income for tax purposes. He rightly notes that the ruling opens the door to, quote, the expansion of federal taxing power beyond the limits, unquote, close quote, of the Constitution, including taxes on all sorts of wealth and property that has never been subject to federal income tax. No less than the chairman of the Senate Finance Committee, Oregon's Ron Wyden, has floated a wealth tax proposal. The justices have a chance in Moore versus the U.S. This is the tax case of these people in Oregon that invested in a company in India that an IRS made an income tax assessment, to restore the proper legal application of income tax and avoid a constitutional clash that could do substantial economic harm. Now, why am I bringing this up? Well, right now, you've got the Ninth Circuit Court of Appeals, which in that circuit area, which is California, Oregon, and Washington, they can assess wealth taxes on you. And the court has said it can happen. How would you like a line on your return? Oh, and by the way, this isn't on people making over $400,000. These people had an untaxed, an unpaid retained earnings increase in the company of about $60,000, and they were assessed $14,000. Remember my post about food servers, people who make less than the minimum wage in almost all 50 states. The IRS is cracking down on them. So even when there's all this rhetoric about people over 400,000, it's never going to be true. So you've got a portion of the country that this could spread across the country, because you have the Senate Finance Committee wanting to tax your unrealized gains. Why is this so important? How'd you like a line on your return when you're done with all your taxes, that there's a regulation that says take your earnings, multiply it by 10. I want to point out that the S&P 500 is at a 30 multiple. So let's say you had to take your earnings, multiply it by 10, cause that to be the unrealized gain or value of your private company, and then remit at ordinary tax rates, which can go as high right now as 37%. They wanted to move it to 39.6. So let's say, you made 100,000, and then they say, well, multiply that times 30. That's 3 million. Now give us 37% or 39.6. Let's round it to 40%. You'll owe them $1 million too. Now, it's going to start out small. All taxes start out small, and they grow really large. But this is happening right now, and nobody's watching it. So right after this post, I have about a 4.5-minute, 5-minute video by Daniel Henniger, and he's talking about first the distraction, so don't get blown away that there's a little Trump thing on there, and that it's distracting people by what's going on underneath, and it's about to make some really large changes in how your business operates, or if it can operate at all, and how much money you get to keep. So take a look at it. Write your congressman, write your senator, be prepared for this. It's coming, because there's a proposal in the Senate and there's laws floating through the court system. If the Supreme Court refuses to hear it, you're going to see this blossom across the country, particularly if the Democrats get control of Congress. So take a look at it. This is Greg Andruch. I'll catch you on the next one.
Me with 400 years in prison for possessing my own presidential papers. This is called election interference.
Deliberate or not, the latest Trump indictment is further distracting Americans as to what the Biden presidency and his policies represent for the country's future.
Basically, for Trump, it was a campaign day with a stopover for an arraignment.
Fact is, the stakes in Team Biden's agenda could not be higher. Sadly, the interest level, which has siphoned off into the Trump legal drama, could not be lower.
America needs a deliberate, hands-on investment strategy to pull forward innovation, drive down costs, and create good jobs.
The danger, as a Brookings Institution speech by Biden National Security Advisor Jake Sullivan makes clear, is that the United States is backing into a major reordering of its political and economic system without anyone noticing it happen.
A modern American industrial strategy identifies specific sectors that are foundational to economic growth, strategic from a national security perspective, and where private industry on its own isn't poised to make the investments needed to secure our national ambitions.
Let's talk about golf. I've been struggling to figure out what bothers me about the announcement that the PGA Tour is creating a new golf entity with Saudi Arabia's Public Investment Fund. Jake Sullivan's industrial policy speech clarifies the problem. Everywhere you look, governments are muscling in on the lives of consenting businesses and consenting adults.
I still hate LIV. I hate LIV. I hope it goes away, and I would fully expect that it does.
The PGA, which has been in litigation with the Public Investment Fund over the Saudi-backed golf tour called LIV, has entered into an undefined commercial operation that will have a common PGA Saudi ownership.
Whether you like it or not, the PIF are going to keep spending money in golf. At least the PGA Tour now controls how that money is spent.
Rightly understood, this is a hostile takeover of an American sport by a government.
If you're thinking about one of the biggest sovereign wealth funds in the world, would you rather have them as a partner or an enemy? At the end of the day, money talks, and you'd rather have them as a partner.
It's as if the National Basketball Association agreed to share common ownership with the government of China, which is not beyond imagining.
The People's Republic of China continued to subsidize at a massive scale both traditional industrial sectors like steel, as well as key industries of the future, like clean energy, digital infrastructure, and advanced biotechnologies.
Jake Sullivan's Brookings speech isn't critical of China. He praises the Chinese government's investment model as a case study for America. And that's precisely what the Biden administration has done. Use rulemaking and spending legislation to massively subsidize green industries in the U.S.
Our objective is not autarky. It's resilience and security in our supply chains. Now, building domestic capacity is the starting point, but the effort extends beyond our borders.
What we're seeing here is the inexorable rise of state capitalism, a system that deploys the state's authority and money to force acquiescence to its goals.
It's hard for me to not sit up here and feel somewhat like a sacrificial lamb and, feeling like I've put myself out there and this is what happens.
This isn't like getting paid to wear Callaway on your cap. Pro golfers are about to become employees of the Saudi state, just as the employees of the once proudly independent auto industry are now effectively working for the United States government's paid-for green companies.
We are leveraging the Inflation Reduction Act to build a clean energy manufacturing ecosystem rooted in supply chains here in North America, extending to Europe, Japan, and elsewhere.
Like the PRC, Team Biden's vision for United States industrial policy is one in which the government explicitly leads. Everyone else is reduced to following that lead.
This is how we will turn the IRA from a source of friction into a source of strength and reliability.